Hello everyone, I'm Kate Hill and welcome again to the Adviseable Advantage Property News Update. We do try and give you honest and balanced commentary and content here. So before we get started, please subscribe to our YouTube channel, hit that notification bell so that you're not missing out on all our further news updates, our suburb analysis reports, and all those hints and tips around buying property. If you're enjoying this free content, then please click on that like button too. So this week I will cover off on housing markets remaining stable, auction activity rates, expats buying Australian property, falling population growth predictions, and mortgage repayment holidays ending soon. You can then jump to each particular segment that you're interested in if you don't want to watch the whole program. Also, don't forget that we at Adviseable as buyers agents are out there every day, 24/7, looking at property, analysing property, buying property. We are at the coalface of what is really going on out there. We are here to help you if you've got any questions at all about property buying or anything else around the property markets. You can watch our video here, and I've also listed it in the description below to watch a special Melbourne feature. I know it sounds like we're repeating the story every week, but CoreLogic's most recent price data does demonstrate that housing markets continue to remain solid across Australia. Their figures for August show that house prices dropped in only 2 of the 8 capital cities, and of course this is generalising as well. Prices rose in Canberra, Hobart and Darwin. They were unchanged in Brisbane and Adelaide and Perth. House prices also rose during August in the regional areas of New South Wales, Queensland and Tasmania. Sydney and Melbourne were the only capital cities to record decreases in their house prices during the month. Overall, house prices nationally fell 0.4%, pulled down by the negative results in our 2 biggest cities. But there was a small increase during August in regional areas, as I just said. In the year to date, house prices remain about 1% higher than at the start of 2020, helped by a 2.3% increase in regional Australia. House prices remain higher than at the start of the year in Sydney, in Brisbane, in Adelaide and in Canberra, in Hobart, in Darwin, as well as the regional areas of New South Wales, Victoria, Queensland, South Australia and Tasmania. Unit prices are up about 1% nationally in the year to date, with a 2.1% rise in regional Australia. To get a more in-depth discussion on particular locations, do have a watch at our special city feature videos. The week ending the 6th of September saw relatively stable results in our auction clearance rates, despite actual lower auction activity levels. With auctions, we do talk mainly about Sydney and Melbourne, where a large percentage of homes are sold in this way. CoreLogic research tallied 882 homes taken to auction over the course of the week, which is down from 1,128 on the previous week and 1,533 from the same time last year, so almost half. Of the 696 results collected, 67% were successful. Over the same week last year, a final clearance rate of 72.3% was reported across the combined capitals. Auction activity came to a virtual halt in Melbourne this week, with just 28 homes taken to auction. CoreLogic have said that the lower activity level is not really surprising, given the city has been in stage 4 lockdown for the past 5 weeks, meaning that both on-site auctions and private inspections are currently banned in Melbourne. 2/3 of Melbourne auctions were withdrawn this week, skewing the clearance rate lower. Meanwhile, Sydney saw 625 homes go under the hammer for the week ending the 6th of September. This is down from 706 homes last week, but up on the 528 homes this time last year. Of the 491 auction results collected, 69% were successful. This time last year, Sydney recorded a final auction clearance rate of 75.7%. Canberra recorded the highest preliminary clearance rate of 78% across 70 auction results, followed by Adelaide with a preliminary clearance rate of 69% across 42 results. But please do note that auction clearance rates mean actually very little in markets like Adelaide, where the vast majority of property is sold by private treaty. A number of real estate agents have reported that expats living abroad are buying up Australian properties as they are encouraged by Australia's low rate of COVID-19 cases and our political stability. International searches for buying property on realestate.com.au in July were up 22% compared to the same time in 2019. So Aussies based in the United Kingdom, in Singapore, in Hong Kong, the US, they are leading inquiries on beachside and hinterland real estate, mostly across the eastern states. Realestate.com.au's chief economist says that there is strong anecdotal evidence that many expats are re-evaluating their circumstances due to the pandemic. And the low Australian dollar and low interest rates, they provide an attractive value proposition. The Gold Coast and the Sunshine Coast are popular targets in Queensland, while beachside suburbs of Sydney are also on the so-called hit list. In Melbourne, the CBD, the South Yarra are Melbourne's most searched for suburbs by offshore buyers. Now, we love a good prediction here at Adviseable, so here we go. Data from the Treasury Department has indicated that the annual population growth for Australia could reach levels not seen since 1917. Cue dramatic headline. With predictions of growth at around 0.6 of a percentage point through the 2021 financial year. Net overseas migration is expected to drop from 232,000 to 31,000 over the same period. Now, we expect that this will disrupt housing demand to a degree, but the impact really is unlikely to be evenly spread. Australia's two largest cities, Melbourne and Sydney, are predicted to be hit the hardest from this falling demand. From a housing market perspective, the drop in low net overseas migration will likely result in a higher volume of rent listings and falling rent values across our inner city precincts. So last year, out of the 84% of all overseas migrants who went to the capital cities, 3/4 of those capital city migrants arrived in Sydney and Melbourne, and they generally populate precincts close to the CBD. So, as we've reported before in our news updates, the impact of the fall in overseas arrivals can already be seen in rental listings more than doubling across key inner city unit precincts. Now, rental demand may improve in these areas once foreign student arrivals stabilise. But in the meantime, investors who own property in these locations are likely to be facing high vacancy rates, lower rents, and a reduced ability probably to service their mortgage. Now, this might result in more distressed sale listings. In finance, along with the federal government's JobKeeper scheme, the 6-month mortgage holidays, which have frozen almost $200 billion worth of debt, have been crucial to helping Australians navigate the economic fallout from the coronavirus. With repayment holidays coming to an end very soon, thousands of households face the choice of whether to restart paying off their home loan or securing a further 4-month extension of this deferral. Many mortgage brokers are advising that the main thing these borrowers need to keep in mind is that they do have a range of options. The Australian Securities and Investment Commission, ASIC, has warned lenders that they need to be flexible and provide help which genuinely addresses the needs of consumers. If borrowers are still facing financial hardship, then they should have confidence from ASIC's assurances that they will be treated sympathetically by their bank. According to ASIC, the lender should be contacting the home loan customer prior to their repayment deferral expiring, along with clearly setting out the available options and providing information to help them make a decision. Now, many borrowers may have already advised lenders that they can resume payments, but those in doubt should know how much their future repayments will be, how much extra interest they will have to pay, and whether this is affordable for them. ASIC's guiding principle for banks is to avoid defaults, evictions, and forced sales wherever possible. The banks should be working with their customers who are facing financial difficulty to find the best possible solution. If you are not confident about these negotiations, then please do get in touch with us so that we can put you in touch with an experienced mortgage broker or financial advisor. Please subscribe to our YouTube channel so that you don't miss out on our area reports, webinars, further news updates, all our hints and tips around property. Do let us know if you've got any questions at all or suggestions as to content you might like. Please check our website for more details on our services and how our advisors and buyer's agents can help you. And I will see you soon. Bye.